Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, July the 5th, 2013. I'm sitting here in the office with Napoleon and Pistachio, my two Boston Terriers, on recording this video on July the 7th, Sunday, July the 7th, 2013. So let's just dive into these markets here. We're looking at the Dow futures on the daily chart, as we usually do, as we usually start out. And the market here has been nothing short of tricky. So if we kind of zoom in on the current price action, we've been talking over the last couple of weeks about a deeper pullback in the stock indices, down to the 38.2% level, which would coincide with this now rising trend line. 50% level, 13,841. The 61.8, 13,463-ish. So that's what we've been looking for. That's what we've been wanting to have happen in order to get on the long side of this market. That being said, this market looks like it's starting to put in this looks a lot like a flag pattern to me, where you've had, you have a, if you're familiar with chart patterns, you have a run up and then you sort of put in a flag and then you continue higher. So I'm not sure that this is exactly what's happening, but if we get a breakout of this level here, above this trend line here, this to me is starting to really look like a flag. We're not really getting a lot of downside activity. We did break 14,800. But we found support, around 14,450, just above this level here. So we didn't really get a lot of follow through. So here are the scenarios that I'm looking at this week. The one scenario I'm looking at is that this, that we may not get any downside, and this might be setting up a potential flag pattern for a continuation back up to the high side. The other scenario that I'm looking for is that, if we fail this trend line level here and we come back down through the 20-period moving average here, then we're going to retest the bottom of this channel somewhere in and around where this trend line meets. So this is an area that I'm looking at with a scenario of a sell-off from this resistance level here around 15,100, somewhere in around that level. That's one of the scenarios. I'm still net bullish on this market. I just don't know how far it's going to pull back. The other scenario is just that, this is really starting to look bullish. We had many days of consolidation and we didn't push lower. We're pushing higher now above that range. And now the 21 exponential moving average is starting to do this. It's starting to roll up to the high side. And you can see we came down. Friday we actually sold off. We pushed up, and then on Thursday, and then on Friday, let me actually just zoom in here so that this makes a little bit more sense. So looking at the intraday price action to try and get an idea of what the market's going to do on a swing basis. We had, this action on Thursday, and then on Friday morning we were red. And we were all the way down, like this bar was looking like this, right down into that 20-period exponential moving average. It looked something like this in the morning. So I was looking at potential support off of that 21 exponential moving average to see if we would bounce off of that level. We actually did, as you can see, and we put in a hammer candle pattern right off of that 21 exponential moving average. So when I see that kind of action, I'm always watching to see if we're going to follow through. You can see the 21 is now sort of trying to slope to the high side. We came down, we held that level, we're pushing up into resistance. So we're really stuck in between resistance and support, right? You can see that right in and around there. So if we break up to the high side above this moving average, or above this this level of around 15,100, and we break above this trend line, then I'm going to be looking for a retest of these highs. But if we actually come back down and fail this 21 exponential moving average, I'm going to be looking at a push back down into this lower trend line. So at this point in time, we're just in a minor down channel. It's starting to look a bit like a flag, a continuation flag, but we really need to see a breakout, a confirmation breakout in order for that to happen. So those are really the decision points I'm looking at. I'm looking at, a break above this level, 15,100, and a break above this trend line for a retest of the highs, and then I'm looking for a break of the 21 exponential moving average on a clean basis for a retest of these bottom levels, this bottom, this minor bottom channel, and to see where it's going to come into this confluence zone where this long-term trend line is rising. So that's sort of what I'm looking at. Those are the scenarios. At this point in time, you're right at a line in the sand, and it's a 50-50 guess which way it's going to go until it breaks. So let's look at the S&P futures. Same scenario. You're right at that downtrend resistance. You have this that sort of flag, sort of down channel going. And if we look at the NQ, the Nasdaq futures, are looking very similar from a chart pattern perspective. Same sort of scenario. Now I think we did. Let's see, I think this coincides with that trend line. So we did find support at this longer term trend line here, which lined up with the bottom of this channel. So that's what I would be looking for. This is sort of what I'd be looking for in the Dow and the S&P future if we do actually fail, these sort of levels. So on the Nasdaq, that already sort of played out. We found support, and now we're pushing up to the high side. If we can break through this, what's starting to look like a flag pattern, then we'd be looking for continuation back up to the highs, and then see if we can get anything going from there. So let's look at the transports. Now the transports are looking like they're starting to break through that kind of flag. You see that? If we zoom in this level here, if we can get above 62.91, I think that's really where the rubber's going to meet the road in the transports. And we could probably, because this market is looking, well, this instrument rather, it's not necessarily a market. This is more of an index that tracks the transports. If we get continuation above this level, a break above that level, this might be giving us a heads up indication that the other indices are going to go higher or at least the Dow from a Dow theory perspective. So this area I think is really key. If we fail that area again, then we're going to just be looking for a retest of the bottom of that channel. Hope that makes sense. I've probably already spent more time explaining it than I need to. So let's jump over to, let's look at the dollar index. Dollar index has been very strong. The force is strong with the dollar index, and we're right back in at these highs around 84, almost 85, 84.80. What is that level? I've got a lot of levels overlapping, so it's hard to read. It's really close to 85. So we'll be looking to see if the dollar index is going to break through what's now this established range and see if we can get any continuation to the high side. Let's look just quickly at the USD CAD. And you can see the USD CAD is broken through the $5 level and is now, looking to potentially test this target at 107, 107.6, 108, somewhere in around that level. I'd like to see that. I'd really like to see that happen. Just from a personal perspective. Let's jump over to the euro. The euro broke $1.30 again. We've got support coming in around $1.2753. I'm not really looking for, unless we really decisively break these lows or we decisively break 85 in the dollar index on the flip side. I'm just looking for the breakdance fight to continue back and forth between these two major major instruments, so, and major market sort of proxy, or I don't know what you would really call it. They're really just heads up as to what's really going on there in the in the world. So to me it looks like just a breakdance fight between the dollar index and the euro. Neither one of them really wants to let go, and neither one of them really wants to for lack of a better description, be the runaway market. So to me, it just looks like, they're just flip-flopping back and forth still. The analysis is almost the same as last week, except that we pushed through some major levels in terms of support and resistance. So the euro is below resistance, or below support rather. $1.30 is now resistance, and the dollar index is above 82.50. So let's take a look at the gold. Gold looks sort of interesting to me here. I know people are always trying to catch bottoms, but we were looking at a long-term support zone between 1,100 and $1,000 an ounce in terms of where the major fib levels came in, and we're above those levels, but we could surely test anywhere between $1,000 and $1,100 an ounce. But what I'm looking at here is we pulled down and then we pulled back up, and then we have this minor. I'm looking to see if this is going to become a lower high. So I'm not saying that it's going to happen, but when you see here, you've got a low, here you've got a high, and we pulled all the way back down, and this coincided with a 61.8% retracement of this move. Now that's not really that significant from a macro analysis basis, but I'd like to see, like, when the market looks like it's trying to bottom, if we can do this sort of scenario and then we can hold this level and break back above these highs, then I'd look at that and say maybe we have a potential bottom in. So that's what I'm looking at here. I'm looking to see if we're going to hold this 61.8% retracement, push back up above those highs. That would give me an indication that we might be, the structure of the market might be changing from a long-term bearish stance to an intermediate bullish stance. So we need to obviously get above these key moving averages, the 21 exponential moving average. But this in the short term is what I'm watching to see what's going on. If we actually break this level to the downside, 1,176, then I'd be looking for 1,000 to 1,100 per ounce. Those are the the decision points and the scenarios that I'd be looking at. So let's take a look at gold's sister, the silver. Silver's looking very, very similar. I don't know if that's a 618 move. Let me just draw the fibs on there. Low, high, just below the 618. So same analysis applies on the silver. Let's look at the copper. Question is copper bottoming here? Excuse me. It is, it's hard to say, but we have the same sort of scenario on copper here. So they're all of these markets. What this is telling me is these markets are fairly correlated, and when markets are pretty well correlated, what you want to see is which one is actually leading the move, and if that can give you some type of a heads up or an edge in determining which way the other markets are going to go if it starts moving first. Just like it just jumps out of the gate a little bit faster and gives you a bit of a timing edge. So it doesn't always happen, but these markets to me look pretty fairly correlated, pretty well correlated. Let's look at crude oil. Crude oil has been really interesting. This scenario that we've been talking about for a really long time has finally played out. Unfortunately, I'm not really keeping on a daily basis my eye on the ball, and I missed this move. I missed the break back above 97, the break above 99 for a run of 103. Now, having said that, that's not really a lot of room to make a profit, but from an analysis standpoint, even if I was watching this, I'm not sure that I would have taken the trade. It's it's $5 on a swing trade. It could be a decent swing trade, but it could come off those levels pretty quickly. So what I was really looking at, I'm really looking at the analysis of this to see, like, why is oil going higher when the dollar index is going higher? Is it a geopolitical event that's driving it, like what's going on in Egypt? That seems to be the consensus among people that I discuss this with, other traders in the room, other people that I've got some family that have worked in the oil industry in in different areas. And that's sort of what they're looking at. They're thinking this is probably driven by Egypt, and once Egypt gets resolved, if it gets resolved, then oil will kind of come back down to 95. That's sort of their opinion, or that's one of the opinions they've expressed. For me, what I'm looking at from a technical perspective, I've been looking at this wedge pattern for a long time. We broke to 86.91 or 87, and we held that, and then we just sort of kept coiling, and then we broke above. I was looking at $101 to $103 a barrel as potential resistance. We're now right at that line in the sand at $1.03. So what I'm looking at here is to see, have we built up enough energy to really get something going to the high side? So if we get, let's say, a minor pullback, or not even a minor pullback, and we get a thrust through $1.03 or $1.04, then what I'd be looking at, I think the next major levels are $1.10 to $1.15. You know, from memory, I think that's where the next major resistance will be. So a move from 97 to 103 wasn't that substantial for a swing trading basis, but if we can get above, like if we were in this trade and we could hold it and just trail it up and see if we can get a move above, this would be the real move. $110 to $115 a barrel. That would represent a pretty good run in the crude oil in the short term. So, you know, we're not in this trade, but we've been, you know, this analysis took a long time to play out, and it looks like it is playing out. So the next decision point really is a break above, you know, $1.03, a clean break above. That's a terrible drawing. So if we can get a clean break above $1.03, then what I'd be looking at is a move to anywhere from $110 to $115 a barrel. I just want to be clear on that. And if we can't get above $1.03, then we'll just come right back down into support somewhere probably around 95-ish, which would coincide with that trend line. So that's what I'm looking at. Let's take a look at the nutty gas. That's right, I did call it nutty gas. So we were looking at this $3.70. The $3.70 level, and we broke this level. We came right back into it, and now we're finding resistance at $3.70. This confirms to me that this is a key level. Now what I'd be looking for is to see, are we going to hold $3.70 and push off to the downside and retest these lows, or are we going to put in a minor higher low, similar to the the analysis of the gold, and you see that comes in right at a 618 level where that minor red line is. So are we going to hold this level and push back up to the high side? So those are really the decision points. We still really need to get through $3.58 and then $3.51, to the downside to see if we can test, anywhere from $3.20 to $3.25. So there's enough room to make a profit, I think, on the downside if we actually break those levels. But this is a really tricky area to be, and in order to get anything going to the downside, one of these scenarios have to play out. So we're either going to have to hold this level, push off back to the high side, or we're going to have to really the level to break is this level around $3.51 now. If you were in the trade on this break, then you're just sort of, stuck in the middle. So these markets sometimes take a while to unfold, and it can be frustrating. So what markets have we not covered? We looked at the gold, we looked at silver, we looked at crude oil, natural gas, we looked at some key currencies. Let's just take a quick look at the soybean market. So the soybean market, I was actually expecting more upside off of this first test of the 21 exponential moving average, and we've just sort of been meandering there, and we can't really seem to get anything going to the high side. So what I'm looking at is I'm looking at this trend line here, but I'm also looking at, a potential test of, the 50% retracement and the 61.8% retracement. That would coincide with the breakout of this basing pattern. You can see here when we broke out above this base and above these highs to see if we can come back down, test and hold those levels, and then push back off to the high side. So that's what I'm looking at. That's all I have this week. I hope it helps. Good trading, and enjoy the rest of this semi-beautiful Sunday. It's been sunny. It's been cloudy. So good trading, and all the best. See you next week.